The AMD CEO Julie Su discussed the surge that she's seen in AI investment.
The need for compute continues to be immense. We see that throughout all of our customers globally, and we're going to continue to invest strongly in this area because I think this is the single most important technology. I like to say it's the single most important technology of the last 50 years.
Thanks to the introduction of DeepSeek, the cost of AI has shrunk significantly, lowering the barrier to entry for smaller firms. Joining me now to discuss the outlook for AI demand and the broader space, we've got Jonathan Frankle. He's the chief AI scientist at Databricks. The company helps enterprises build and scale custom AI models. Jonathan, it's great to have you in studio. Thank you for being here. I am curious about how you are viewing the DeepSeek of it all, because from a market's perspective, we've seen a little bit of a sell-off in some of the big tech names since. There's a question about the kind of ROI of AI. What do you say to that question?
So I look at it two ways. I mean, the first is a question about what does DeepSeek mean for our customers? And the answer is it means more AI at a better price. It's the same thing with, I look at this new funding round in OpenAI, I look at, the Llama models, I look at our friends especially at Anthropic, where we just signed a deal where Anthropic models are now available on Databricks natively. The idea is let's give people more choice, let's give people better technology. So my focus is just, on our customers at the end of the day. There's a bigger question of kind of, what does that mean for the broader ROI in AI? I think it's great. I think that if you make technology more cost effective, more people are going to adopt it. There are going to be more use cases that make sense and have ROI, and we're going to see more use of AI in general. So it's great for the space if cost comes down.
On the ROI of AI, which do you foresee as being more likely? Companies being able to use AI to be more productive and therefore cut costs, or companies being able to charge for their AI and that being a potential profit margin driver?
So I think the answer is yes. I'm seeing anything and everything right now. We're still in the discovery phase where people are trying all sorts of things, but with any productivity enhancing technology, it allows you to do two things. You can do what you did today or what you did yesterday, only cheaper, and it allows you to do entirely new things that simply didn't make sense before. I think there are certain things, like we can look at all these deep research and thinking and reasoning models that have come out recently. They're allowing people to do things that a human could not physically do, to read all the papers on a particular topic and develop a report on that. You can think of it as a productivity booster, but you can think of that as net new technology that was simply impossible before. A human couldn't do that in their lifetime.
Okay, so Jonathan, what we saw emerge in the last year plus is concerns that companies would slow down their investment in AI. And of course, I think that has only been amplified by what we've seen recently in terms of a big increase in economic policy uncertainty, which tends to have a chilling effect on all kinds of business investment. Do you see that happening?
No, I see a huge amount of investment in AI. I spend a lot of time, my title may be Chief AI Scientist. I spend a ton of time with our customers because I need to figure out what science to do. What I'm seeing is they're starting to get clear ROI from AI, and that means they're investing even more. I think more broadly, we can look at the state of the market today or the state of the market yesterday, but in 1997, if you had said, are we investing too much in the web or too little in the web? Look at where the web is now. Look at where the internet is now. Any amount of money you could invest looked like a great value back then, and the companies who really jumped in immediately got ahead and have stayed ahead. And I think the same thing is going to be true about AI. I'm looking at our customers who are tech forward, willing to take some risks and willing to try things. I think they're going to be the leaders in their categories going forward.
But to Christina's point, there is this increased risk of a recession. Now Goldman Sachs saying there's a 1 in 3 chance of us having that. Are your customers potentially going to say, well, if we're entering a recession, maybe right now is not the time to invest in the future web. Maybe we wait another year, maybe we wait even 6 months just to kind of hold off and see where this economy is heading?
Now, I'm not a macroeconomist, but speaking as an AI scientist hanging out with my customers, I'm not seeing any of that. I'm seeing investment and grow, and I'm seeing people finally hitting ROI. I think if we had talked about AI 2 years ago, there was a lot of question of is this a great demo, but what does it really mean in production? I'm seeing customers who have real products deployed where they're actually getting product market fit. And now the question is, how do they iterate? How do they build the testing and infrastructure necessary to ensure that this is working? And how do they figure out how to improve it? That's a sea change from where it was a year or 2 years ago, where people were still trying to figure out what to even do with this technology. So I think as long as people are seeing value, people are going to keep investing. And as long as people are seeing efficiencies from this, supposing that we do end up in an environment where, things are a little bit trickier economically, why wouldn't you invest in efficiencies?
Are you getting questions about policies from this administration from your customers?
At least not in my position. Again, I'm a scientist, so I'm really concerned with how we build the technology for them. Nobody's asking me about policies. Everybody's asking me about how to go faster.
How to go faster. So Christina, why are we not seeing that in the market action? When you hear, obviously you are very bullish, Jonathan, but the tech stocks are driving the entire market down right now.
Well, perhaps, first of all, they're not hearing what Jonathan's hearing, right? They're just worrying. And I think also the bigger picture for tech stocks is that valuations are high. And typically when we see economic policy uncertainty go up, or really any kind of uncertainty go up, that creates downward pressure on those stocks with the highest valuations because they are arguably priced for perfection or near perfection. So I think this is just a natural phenomenon that occurs right now because, as we heard from different Fed officials, so many people, we just don't know what's going to happen this year.
We certainly don't, but I know that one area of the market where we have seen perhaps a little bit of bullishness, despite the negativity, is in quantum in particular. Jonathan, I wonder how you're thinking about the opportunities of quantum and supercomputers.
Unfortunately, I can't say a ton. My title is Chief AI Scientist, and you'll have to call a Chief Quantum Scientist to chat about that. One thing I know as a scientist is I stay in my lane and speak about what I know, and I leave it to the experts to speak about other things. I'm not a quantum expert, unfortunately.
All right, Jonathan, thank you so much for joining us.
Thank you for having me.
Making the time this morning.